Here we go. Now, iceberg up here. Understand context. The market already found the iceberg, and we highlighted it over here. Got it? So there's context around this. You've got the market that comes in, and it's fails to go through it. Comes in here, fails to go through it. Just watch my cursor. Then it comes back up here, fails to go through it. At some point, it ain't going to fail to go through it. So the more attempts, the more likely you're going to have shorts leaning on this sell order. What do shorts have to do in order to get out? They have to buy it. What do buyers need to get out? Sellers. Just follow that progression. Shorts are buyers. Buyers need sellers. What's an iceberg with it when it's red? It's a seller, and it's a big seller. Shorts are leaning on it. When it goes, price goes. Now, here's the timing mechanism. We don't want to get long when you see too many other longs. Let me back it up. Watch when remember when I said when it first came up here? Look up there. Too many longs. Look here. Too many longs. And I was telling people, be careful trying to play this breakout now. Too many longs, too much competition. Even I go forward, too many longs, too many longs, too many longs, and it comes off. Too much competition. You don't want to be long with other people. So then all the rotations come up, and what we finally got was this jump. And this jump was right in here, this nice jump right there. And no, it wasn't right there. It was right here. We got it's green, it's green, it's green. So you got too much green in here. So you don't want to be trying to play the breakout there. But as we go along, just watch this. Let me play it. We have a jump, a little bit of a jump, which gets your attention because you know this is here. We know this is here. And we also know the 200 lot above it is going to be taken out if they take this guy out. You see my cursor in real time going over everything, saying we'd like this green to go away before it goes through it. There's the jump. Pause it. It jumps and gets above that long because of all these shorts coming in, and now they're like stuck. They all get short and they take immediate heat. That's when the probability to go up is most likely to happen. Now, even though some longs come in, let me fast forward it. Boom. Even though some longs come in, as soon as it flipped, boom, and these, let me stop it. It sounds like John Madden. And these shorts come in is when I said this is worth a shot. It was right here. More red than green. We know the context. We got the red laser, and then it even fills out more with red. Look at that. Look at that. Look at all these gray spikes, which are bids to get out of a short. These are little Johnnies playing this because they see it work as resistance all the way up in here. And this is like the dynamic and the reason why breakouts are breakouts. This is what you need. These are the ingredients you need for a breakout to be a breakout. So then what do shorts want? They want to buy this if it goes through there, but when they miss it is what creates the follow through. When they miss covering a short because they were leaning on the sell order is where the chase and why the chase is on. So if I play it, you could see all this red continuing the upside fuel. And it's like, even though some longs are coming in, it's like we stay there at above there. We're going to take this 200 lot. And I told people, we take this 200 lot out. There's effortless. Let me pause it. They go get this 200 lot, and it's gray because the whole order is being shown. They go get him, then all these shorts are going to be chasing. And the upside is even going to be easier. And sure enough, as soon as they took that out, we had an easy path up, generally to this 87, 89 area. Nice little jump there. Give you a little extra. And then when all these longs come in, was a chance to scale out of 1, 2, 3, partial, all of your positions, whatever. But this is a breakout, and anticipate it, and then to know why a breakout breaks out, to know the anatomy of more buyers, less sellers. How do I get there? How do I get to more buyers, less sellers? Well, more shorts, less longs. That helps. And you get these shorts that are trying to sell it underneath this iceberg, and they're leaning on it. When the lean goes, they go. Just think of leaning on a wall. When the wall goes, the wall's the order. The wall is the iceberg. And if you're leaning on the iceberg and you're a short, that means you're leaning on the iceberg. Boom, the wall just disappears. You're going to fall through the other side, which is to the upside. And then all these, longs come in. It's time to get out, even though there was still upside pressure. And I said, there's still upside pressure. So you had a chance to go into our gray zone up here, and it just went sideways instead of going down. New shorts came in. You see that, which puts a little more upside pressure, timing mechanism that we're going up. And then I stopped the recording. And, but the point is, Do you know why a breakout's a breakout? Because there's three trades. There's breakout trades, there are fades, and then there is continuation. Fades are looking to sell a high, buy a low. Continuations kind of like a trend, pullbacks, it rallies by a pullback. And breakouts is when you think it doesn't always have to come into a square and into an iceberg, but breakouts is when the when moment is that you're going to get some action and the market's going to quickly start to make a move. And either you're on the team or you're not. And if there are too many people long, the son of a bit, it's not going to go up. It's like too many people on a boat, it's not going to float. But if you shake out some longs, it could go up. If you shake off some people, throw their ass off the boat could do what it's supposed to. That's the dynamic of what makes markets do what they do. And if you don't know that, well, you're with the majority because most people who try to trade don't actually know that. Remember, you're on our charts or you're in our group. And at this point, you could just see and feel, and people are watching this video, whether or not you know this. You're honest with yourself. You don't have to be in a big room and have to raise your hand and admit that you don't know this. You know whether or not you know this. And if you don't know this, you have no really, you shouldn't be clicking the mouse and putting on risk. You really shouldn't.